Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Prashant and Sonia. We are, of course, on the penultimate day of the monthly expiry, which normally is a big trend day. So let's see how things move. Globally, of course, things are looking a bit iffy. The dollar index that retreated. So in the evening, there was a hope that perhaps the bounce back will continue, but that sort of again retreated. But the big question is, has the dollar index made a double top? If that is the case, then emerging markets could still see a big rally from here on. On the other hand, of course, Brent crude is back above 100, so that could hurt sentiment, though there's FI buying, so that should balance it out. Both Nifty and Bank Nifty bounced right from that 20-day moving average that we spoke about as well yesterday. So let's see if that once again proves to be a bit of a support. Prashant, Sonia, hi, morning.
Hi, morning. Hi, morning, Prashant. Well, you know, for the market itself, I think the level perhaps to watch is the 20 DMA on the Nifty, which is 17,383, which is holding for now. Let's see which way it goes. But the market, the global market setup is indicating that today perhaps we could sort of gravitate towards that. Big fall seen in the Dow, the S&P 500 down for the third straight day. All eyes will be also on crude because Brent crude is now back at $100 a barrel. There's talks that perhaps Saudi Arabia is planning for an output cut. There's also the 3-day Jackson Hole meeting that kickstarts tomorrow. There's the Fed chair who will speak on Friday, reinforcing his commitment to battle inflation. So all of that is going to be tracked very closely. Now, for our own markets, as I said, this 20 DMA is holding for now. But let's see which way it goes. The dips are getting bought definitely. So yesterday, too, there was a sharp recovery from the lows of trade and 17,500 held. The macros could weigh in on the sentiment this morning, Anuj, but eventually, you know, the market is looking for opportunities to buy every dip, and it is it's corroborated by the fact that every time this market sells to below that 17,300 level, the dips are getting bought.
Yes, but Sonia, you know, the market is in a very interesting sort of phase globally. And I think that is a big question because the jury is still out on whether we were still in some kind of a bear market rally which has come to an end, or is the start of a bull market. Of course, those questions for later. We address the near term for now. The SGX Nifty indicating a gap down. Of course, not a big gap down, but 73, 74 points would still classify as some kind of a gap down. So what happens after that? Yesterday's close was strong. So in that sense, that means that the trend has still not turned negative yet. That changes if you start to trade below and close below yesterday's low. And yesterday's low, and you know, it almost worked like an algo trade. Right at the 20-day moving average, the market reversed. Now that average has moved up. So now that zone to watch is 17,345, which was yesterday's low, and 17,385, which is the 20-day moving average. So that's the zone which is sacrosanct. I think something closer to this, the bulls would attempt another recovery, even if that's not sustainable. My sense is it could sustain. The index to watch is the Bank Nifty because that's where you had a very strong bounce from its 20-day exponential moving average, and the close was at its 10-day exponential moving average. So in that sense, because it's the market leading indicator, if that turns, I think that will help the market because if the Bank Nifty starts to turn in green once again, after a gap down, of course, then shorts will have to cover. But let's see, it's so all over the place. Yesterday evening, for example, it looked like, you know, things were getting normal again. But then again, there was some bit of, you know, turn towards the end, Prashant.
Tricky, right? I mean, yeah. I think that much is very clear. It's become much more tricky. And maybe, just maybe, the clean one-way kind of move up that we've seen, that is perhaps now over, most likely. I mean, I think that's the only thing one can say conclusively. Now, where can the market, the Nifty get to? You'll have to look at very short-term levels, right? So the 2-day fall, which happened on last Friday and then Monday, the 61.8% retracement of that fall is 17,745. So it's possible. I would say in best case, the market gets up to that level, which is 17,745. In terms of global data, the big one was the very large miss in the U.S. services PMI number. That was a shocker. I mean, the manufacturing PMI came in okay, but the services PMI down to 44. You know, it kind of tells you that there is broad-based pressure in terms of U.S. economy as we head into the September FOMC. Initially, markets sort of went one way, and then they went the other. So initially, yields fell to lows, both the front end and 10-year, etc. Dollar weakened substantially, and stocks rallied. I mean, on expectations that, you know, the Fed will be easier now because economy is slowing very sharply. And then all of it reversed. So yields were higher, bounced back. Dollar index got to about 108, bounced off there, closed at about 108.5. Stocks, of course, also dipped from their earlier bounds. They ended flat, marginally lower, so not very large one way or the other. But I think, so that's why this is going to get sort of confusing, and we will hear from Fed Chair sort of Jerome Powell on Friday at Jackson Hole, and maybe the market will watch what he has to say closely. But even then, will we know for sure in terms of very decisively what is going to happen? Maybe we get an indication in terms of what happened in September, but this is bigger than that. There is also, of course, quantitative tightening, which sort of the pace of QT doubles from September to almost $100 billion a month. So, I mean, a lot of things are happening, a lot of moving parts, and that's why I'm saying this is perhaps a little tricky now. What would you like? Would you like financial conditions to get a little easier? But that will only happen if growth slows down quite a bit. So it's the devil of the deep blue sea, and it depends on who you ask in terms of what hurts more or what helps. So that's basically the situation we are at. It's possible the market bounces. As I said, keep in mind the 17,745 level. It's possible we get to those levels, but beyond that, I think it's anyone's guess. Sonia.
Also, it's expiry week, right? So all eyes will be on that in our own markets as well.
Yes.
And the Nifty has give and take everything been very resilient compared to all the global market pressure. For now, it's been holding. It is within that range, but holding on to the 20 DMA level. By the way, the European markets were also under quite a bit of pressure overnight, so don't lose sight of that. And the SGX Nifty is indicating a bright shade of red this morning, down almost about 70 odd points. We have lots happening on the show. We'll get an important guest in just a while from now. On the equities front, though, first up, we have some opinion coming in from Neelkanth Mishra of Credit Suisse, who says that Indian equities have risen 13% in US dollar terms since June end, outperforming global equities by 6%. He says all of it came from PE expansion ending a year of time correction. He adds the Nifty PE is back to 1 standard deviation higher than 10-year mean, and premium to the world emerging markets is at a record decadal high. As a rebound ends, he says they move to a more cautious stance. He says they like sectors that are cheap and have lower linkages to global markets and thus lower risk of earnings cuts, like financial, cement, telecom and L&T. They also like defensives like domestic pharma and staples.
Okay, some money market views coming in, and this is coming through from Kunal Sodani of Shinhan Bank, who says that the S&P Global PMI is for most major economies indicated slowing progress and even contraction. He says tepid US data helped investors book some profits, but there are no signs of a trend change. He adds oil continues to hold on to its gains on the back of production cuts, while the US 10-year yield stayed above 3%. Kunal says the dollar index can test 109.29 levels. For the dollar rupee pair, he says 79.65 to 79.7 to a dollar acts as a support, while 80.1 to a dollar is a resistance.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says that the market has started the week on a negative note on the back of a rise in global yields ahead of the Jackson Hole speech this week. He says for the week, the market will take cues from developments on Iran nuclear deal, US PCE data, Fed Chair Jerome Powell's comments in the upcoming Jackson Hole meeting, and the demand in the weekly auction. He expects the 10-year benchmark bond yield to trade in a range of 7.25 to 7.35% for the week. All right, we have lots of stock-specific action to track today, and we'll get to that in just a bit in our special Top 10 segment. But here's a sneak peek into all the stocks that we're looking at. There's ONGC, Oil India, HOEC, Chennai Petro, Arvind Smart Spaces, Confidence Petroleum, and SpiceJet. And that's, of course, on the positive side. On the negative side, there's NDTV, Glenmark Pharma, and Nava. There are stocks that are likely to open in the red.
Okay, all right. We'll get to stocks in just a bit, but we have Mark Matthews of Bank Julius Baer joining us right here from our studios. Mark, great to have you with us here. Thank you very much.
So nice to see you in person, Prashant and Sonia and Anuj. I'm honored to be here.
Business or pleasure?
Business.
Business. Okay.
I met a lady yesterday who told me I looked thinner in person than on television. I'm still trying to figure out if that's an insult or a compliment. So
I mean, every time we speak with you, you look younger, Mark. So I mean, she's absolutely right.
Why not pleasure, though? Or why only business?
Well, I should have stayed for a holiday. You're absolutely right. But I just came back from my long holiday in Canada, so can't do that.
Yeah, you're looking thinner than when you last came. Last you came to our Lower Parel studio. We've changed our studios.
Yes,
so.
Nice place. I like this place.
An inspiration for all of us, right? Oh, both of us.
You must see our newsroom actually, Mark. It's largest newsroom in Asia. So,
Oh, good.
How are things looking, Mark, then? I mean, in terms of markets, we were describing how the US PMI, the services PMI sort of dipped massively, right?
Yeah.
Is that like a game changer? Or do you think, I mean, the July number, for example, was also a miss. But after that, you had the payrolls number for July, which came through much stronger. So does this really kind of tell us that the Fed will go easier or not really?
Well, if you aggregate all of the central banks and what they've done over the last year, they've tightened more than in any time going back 50-odd years. And that leads the purchasing managers' indices. Central bank tightening or loosening leads the PMIs. So we shouldn't be surprised that they are below 50 and they are going down. The global economy is slowing down. And I don't think a month or two ago, if you'd told anybody that was going to happen, they'd be surprised. In fact, sometimes bad news is good news because, to your point, people could look at that and say, oh, the central banks don't have to be as hawkish anymore. But I do think that on Friday, chances are that Jerome Powell will deliver a hawkish speech, because to declare victory now would just encourage stock markets to go up even more, which would stimulate the economy and make inflation go up. So I think that he'll be hawkish. And September is actually, if you go back in history, the worst month on average for the markets. And coming out of this very strong summer rally, it wouldn't surprise me if we were down next month.
But the bar for hawkishness is quite high now, right, Mark? I mean, in terms of for him to say anything which really hits markets hard. Because the markets have already corrected. If this was last week, I mean, things would have been different.
That's true. I think a very important number will be both the PCE inflation reading that comes out half an hour before he speaks, and then the CPI, which, if it's a hot number, then I think people would price in 100. But there's a website called Trueflation.com, which aggregates on a daily basis millions of prices of products and services across the United States. And so I think it's much more efficient and up-to-date, certainly, than the official PMI reading, which only takes us up to the last day of last month. And anyway, that Trueflation indicator is going down very sharply for the month of August. So my sense is that we will get a good inflation reading, and the market will like that.
Okay, Mark, 100 you said aggregate or in the next sort of meeting?
Aggregate, yes. No, excuse me. In the next meeting, I apologize.
In the next meeting, 100.
Well, I don't think that's going to happen. But if we got a really high inflation print and the Fed will be in blackout, then it's possible that the market could panic a little bit.
Could that mark also the near-term sort of bottom for the market? Because, you know, most of the times, you know, if you take it head on and, you know, just go all out, the market says, you know, maybe that's the worst and it's out of the way. Or do you think the market could still make lows for the year?
I think the answer is, do we have a recession or not? If we have a recession, the market will go back and test its previous low, possibly even new lows. That's what history tells us. If we look at the average of bear markets since World War II that were accompanied by recessions, you had an initial bounce like the one we had of about 20% or so, and then it fades. If we don't have a recession, then I think we'll keep going higher, possibly not in September, as I said, but over the next 3, 6, 12 months. My hunch is that will be the case, because I think the labor market is just too strong to have a recession. If it is, it'll be extremely mild. And if you look at the breadth thrust of the S&P and the NASDAQ during July and August, and you look back in history when that happened before, when you went from below 10% of S&P companies trading above their 50-day moving average to over 90% in less than 2 months. That only happened 6 times before. All times the market was higher 3, 6, and 12 months later.
Okay, well, I don't know whether you got a chance to step out and, you know, in India, in Mumbai itself, but just one look outside and you'll tell that consumption is back in a huge way, especially in a market like India. Does that make you feel a bit more confident about investing here? Because we've had a really smooth run up until now, given all the challenges from a global perspective.
I apologize, Sonia. I haven't been able to get out and about in stores and walk down the street, but I have been able to meet some business people in industry, and I could just say that I've been pleasantly surprised at how confident they are in their own businesses. So for what it's worth, I could relay that to you.
So does that correspond to more money coming into the Indian markets? Because we've seen sort of a reversal. FIs are beginning to spend money in India now, or invest money in India rather. Do you think that's a trend that can continue through the course of the year?
I would say no, because the dollar is so strong, and you don't tend to see global investors buying emerging markets in a strong dollar environment. And my sense is that the dollar will ultimately hit 110. Well, we're not far from that. But until that happens, I don't really see big foreign inflows here.
110 is almost here.
Almost here.
But the issue here is 110 is something that the market can live with. Do we see 115, 20 kind of levels? That is what will disturb the equilibrium.
Well, we looked back and we studied the previous times over the last 50 years when the dollar did rise 15% or more within a 12-month period, which is relatively infrequent. And we found that on average it was flat over the next 12 months. But I would say you can always get outliers, and we are living in a very different time where Europe has this big issue with energy, and China is I think definitely going to let the renminbi weaken, because exports are pretty much the only ember in their economy. So it may be we do get dollar strength, even though history tells us that on average it shouldn't really go up much more from here.
What's happening in Europe is amazing, right? I mean, what, $700 for a megahertz? I mean, we're talking about, megawatt, I mean, power, energy cost, right? And this was $70 at the beginning of the year. So it's gone up 10 times.
Wow. Yeah.
But our businesses, I was wondering, do businesses pay that, or this is, I mean, what the grid pays to get the power and then the government subsidizes consumers and businesses? I mean, I would imagine it's the latter.
I honestly don't know the answer to that, Prashant. I do think that the governments increasingly are stepping in to nationalize electric utilities, and so the obvious next step would be to pass on to take away some of the pain from industry. But all I can say is that our own opinion is that there is a very strong supply response happening in both oil and gas globally, and we don't see these prices remaining so high. And you have to remember that the weather, I was in Europe a few weeks ago, and then I was Canada as well. It's just crazy hot. You know, it's like 40 degrees Celsius, or at least it was in the summer. And so hot and dry weather is not good for the wind farms, and of course people are using a lot of electricity for their air conditioning. So I think that it will fade, but certainly it's a big concern.
Okay, climate change is real, right? How much ever we want to deny it. But one final question from my end. How do you approach this market now, Mark, for the rest of the year? Do you stay averse to risky assets because of all that's going on, because of the possibility of an impending recession, or do you go all in? And if yes, what are the markets that you like now?
We did buy some puts on the S&P just as a hedge, because we do think that this rally has been very fast and furious on low volume. And when people do come back from holiday in September, I think we're probably going to get a down month in September. But beyond that, I actually think that we will get a combination of low growth and low inflation, not as low as before COVID, but let's say it settles about 3.5% next year for the US economy, which is our estimate. And we don't get a recession, but then I think it's okay. So I wouldn't panic, and we've remained invested.
Got it. Now, you did say bear market rally. In the US, we did touch the technical definition of bear market. In India, we did not. We fell, I think, when we stopped at 18% or thereabout. And we moved very close to all-time high, within 4% of all-time high as well in last week's rally. Do you think it could be a bit different in India, or would we also follow what's happening in the US?
I think it will be different. And I just said foreigners won't buy in a strong dollar environment. But one thing that's also quite unique in the current environment is the problems in China have basically made it uninvestable for the vast majority of global investors. And that is a $10 trillion market still. So you've got to imagine the money that, whatever's left there, or the money that is looking for opportunities in emerging markets, will look elsewhere. And I do feel myself that among the major emerging markets, this one is the best. There are smaller ones that are good, like Vietnam or Indonesia, but they're very small compared to this one. So I think that's a positive for this market. And I also think that, just as I said in my meetings with industrialists yesterday, a sense of strong capex cycle that's kicking in now, because the last 10 years were very, very subpar growth years for India, a combination of the non-performing assets keeping the banks from lending and all of the reforms, which took a while for the small and medium-sized enterprises to get used to. But now that's behind us. I do think that you're going to have a strong economy and high earnings growth, and typically that leads to higher stock prices.
Last time you were on, you said we may be in a Goldilocks scenario and we just don't know it yet.
Yes,
right?
you've got a good memory.
So, I mean, I think you're sticking with that, right? Not too hot, not too cold.
Yes,
just right.
I do think. I think rates will go up, so I think we will get to probably about 3.5% on the 10-year, and so that does mean that we're still going to have some volatility. But ultimately, we think that this cycle, the Fed is approaching where it can declare mission accomplished. In other words, they've raised rates 220 basis points so far. We see an additional 75. And after that, we actually see them cutting by 25 basis points starting in March. And so I don't think it's like Paul Volcker when they had to raise rates to the moon.
Okay. How long are you in Mumbai for?
I'm leaving for Chennai tomorrow morning.
Oh, lovely.
So too short, unfortunately.
Okay, but Chennai is beautiful as well.
Oh.
Have a great stay.
Thank you so much.
Thank you for joining
And
us.
I hope you don't have to travel too much in Mumbai, Mark. The traffic is just a killer here.
Okay. Well,
But thanks a lot for
thank you.
dropping in.
Thank you.
Thank you for joining us. Okay, well, that's about the macro environment. Lots to talk about there. But we need to take a short break, because when we come back, we'll drill it down to the micros, our list of top 10 stocks lined up in just minutes from now. Stay with us.
Different ages, different stages. Get best protection with Star Women Care Insurance Policy. Always at your doorstep.
OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस। सुनीता, सुना तुमने ये क्या बोल रहे हैं?
यही कि OLX ऑटोज देता है आपकी कार का बेस्ट प्राइस। ये प्राइस ही नहीं, सरप्राइज है। विजिट olxautos.in।
Sit back and relax while we deliver the optimum blend for your needs. Invest in Sundaram FlexiCap Fund today. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
नई कार खरीदने से पहले एको इंश्योरेंस कंपनी चेक करे और 50,000 तक बचाए।
Some folks dream of easy access to airport services. Some have ease of a card. Be it lounge access, meet and assist, spa services, and more. And what powers their credit and debit card is Dream Folks, India's largest airport services aggregator platform. Dream Folks.
सर, आपका कार इंश्योरेंस रिन्यू तो सेम कंपनी से करा लो ना।
चिंटू, तेरी पैसे उड़ाने की आदत गई नहीं अब तक?
मम्मा,
PolicyBazaar.com पे 20 से ज्यादा कंपनीज के कार इंश्योरेंस कंपेयर करके खरीदो और पैसे बचाओ। सिंपल।
Well, our research team is standing by with CNBC-TV18's list of top 10 stocks. So without wasting any time, let's go straight to that. Anuj, what are you looking at today?
Well, Sonia, today is the kind of a day when after the gap down, if the market recovers, you focus on the relative strength stocks. So I think a couple of stocks where you saw some good bounce. Tata Chemicals is one and Ashok Leyland is the other. Basically stocks in a bull market of their own. The point here is if the market recovers, then, you know, normally these are the kind of stocks that you focus on. So that's why I'll keep an eye on both these names. But the big story of, the big corporate story actually was this, what many are calling perhaps a hostile takeover of NDTV by Adani Group. Mangalam has all the details. Mangalam?
Well, that's correct. You know, so the Adani Group has, Adani Group's media arm has bought about 29.18% stake in NDTV. How has that happened? AMG Media has acquired Vishwa Pradhan Commercial, which is VCPL for an enterprise value of around 114 odd crores, which is a wholly owned subsidiary of Adani Enterprises, AMG that is. VCPL in turn has acquired 99.95% stake of NDTV's promoter company RRPR via conversion of warrants, which they held earlier itself. NDTV on its part is saying that exercise of rights by VCPL has been done without a consent of founders. The open offer that the Adani Group has made as a result of this is for 26% stake at a 20% discount to the current market price at 294 odd rupees. And remember, this deal was in the works. At least the street was sussing this out because the stock has rallied almost 5 times in the last 1 year. So to that extent, one sees some red on Adani in today's trading session.
Okay, thanks a lot for that. What this does to the other news media shares and overall dynamics of the industry is the bigger question, right? But as Mangalam pointed out, I mean, this year, the NDTV stock, if you can just pull up from the start of the year, is up 219%, perhaps in anticipation of what has come through.
Prashant and me had discussed this many times. It had come up on our chatter in closing bell. So many times we saw the stock circuit up and, something was
We're wondering why.
Something was brewing, obviously. So,
and now you know, right? Okay. Well, lots to talk about on this issue. It's going to be an ongoing topic. But for now, let's move on. Crude is rising higher as well. It's almost hit $100 a barrel yet again. Sonal is here to tell us more about that. Sonal.
Good morning, Sonia. Well, yes, crude is back above that $100 per barrel mark. That is something that happened overnight. And that is because oil rose, because Saudi Arabia hinted at a possible output cut. And in such a scenario, that would definitely mean that crude will see some legs to this rally as well. This is about crude oil prices, which surged around 4% overnight. Even gas prices, they have been surging. We saw European prices rising by 13% overnight. They're already at a record high level. And this in addition to the fact that Nord Stream will go under maintenance again from 31st August. There was a damage to a key pipeline into Europe as well. So all these factors are leading to a spike in gas prices. Remember, even spot LNG prices at record high levels across that $55 per MMBTU mark, currently at around that $57 mark. So it bodes well for stocks like Oil India, ONGC. However, oil realizations are capped for these companies, but these stocks will be in focus today.
Okay, thanks a lot for that. Well, let's go across to Ekta now. She's tracking some stocks that are in the news. Ekta, over to you.
Thanks for that. Well, I'll start with Glenmark because the US FDA has classified their Monroe facility in the US as official action indicated. That means that it does have regulatory concerns there. But remember that the street probably factored this in because when this plant was inspected all the way back from April 4th to May 19, 2022, the US FDA eventually submitted or issued 17 observations at that point in time to this particular facility. The company had already undertaken a big recall in the previous year, August 2021, and since then was not commercializing any products from there. So yes, sentiment negative because the large part of the bad news is probably factored in. Nava is in focus because of the cessation of a conversion agreement with Tata Steel Mining Limited. So that stock could be in the red. And Arvind Smart Spaces could probably see some green today because they've signed an agreement with HDFC Capital Affordable Real Estate Fund. This is for the creation of residential development platform with a revenue potential of around 5,000 crores.
Okay, thanks a lot for that. Sonal also has some more stocks in yours. Sonal?
Well, I have Chennai Petroleum on my radar as well. An important update coming in there for their long pending project. Now, board has approved a JV with IOC and a seed equity fund, which will be investing in their project. The JV is formed to implement their 9 metric tons per annum refinery project at Kaveri Basin at around 31,580 crore rupees. The seed investors include the likes of Axis Bank, HDFC Life, ICICI Pru, SBI Life. So it's a big chunk of investors that are coming together to invest in this JV. The board has also approved equity investment of up to 2,570 crore rupees in this particular project. It had been pending for a long time, so some equity investments is a positive news. SpiceJet will be in focus again because one, there are reports which are suggesting that the company is looking to raise 2,000 crore rupees through various means, which would also include a stake sale. However, we have not independently verified that. And the board meeting is on 31st August to actually consider their Q4 earnings now. The results were delayed because of a ransomware attack by the company. Confidence Petroleum, they have a board meeting on 27th August to consider fundraising. All these stocks in focus today.
Okay, Sonal, thanks a lot for that. Here's a quick recap then of our top stocks with positive news flow today. There's ONGC, Oil India, HOEC, Chennai Petro, Arvind Smart Spaces, Confidence Petroleum and SpiceJet. While stocks with negative news flow, there's NDTV, Glenmark Pharma and Nava. Let's take a quick break. On the other side, we have so much to discuss with Devin Choksi of KR Choksi Securities. We'll also connect with Hugh Keener of Swiss Asia Capital to discuss the commodity market outlook. Stay tuned.
Get the grip of good health even after 50. Presenting now, Star Health Premier Insurance Policy. Always at your doorstep.
There are those who are always looking for what's next. Changing lanes, shifting modes, always in command. Sensing what lies ahead. The all-new Hyundai Tucson Next drives now.
टर्म लाइफ इंश्योरेंस ले लेना आज।
ले लेंगे। कौन सा मरने वाले? शक्ति सर।
अगर तू टर्म लाइफ इंश्योरेंस लिए बिना ही मर गया फ्रेंड, तेरी फैमिली का बच जाएगा बैंड। 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 430 रुपए महीने से शुरू फ्रॉम पॉलिसी बाजार।
The rich and distinct aroma from our freshly roasted coffee beans is magical. We didn't want this magic to escape, so we freeze-dried it. Freeze-dried coffee from Continental. Continental Coffee.
Your health is our concern. Choose network or appropriate hospital. Our telemedicine and customer care team are available to guide you. Star Health Insurance, always at your doorstep.
Welcome back. Well, the SX Nifty is indicating that we'll have a gap down once again. Remember, yesterday's gap down was bought, but that was because, you know, it was after a 2-day decline, and it sort of coincided with the Nifty testing the 20-day moving average. So from that point, perhaps it was more algo in nature. It will be interesting to see what happens today. But Devin Choksi is with us from KR Choksi Securities. Devin, hi, good morning. Thanks a lot for joining us. Devin, let's first address perhaps the biggest stock in news this morning. NDTV, if you looked at the events, if your view on the stock, if not maybe on the entire media space, what would be your view?
Yeah, good morning. Well, I think for any large conglomerate, I think the media business, I think, is a strategic fit, as we all understand. And I think this is where probably the intention seems to be from the Adani group, as far as acquisition of NDTV is concerned. Normally, I think these kind of properties, they do take time to develop. And I think this is one important, area where I think the corporates are able to put attention to. So I think fortunately, I think you have few companies there, basically, I think they have created the brand in the market, I think, which are basically available, I think, for somebody to acquire. And that's where I guess I think this particular transition has happened. In my viewpoint, I think we do not know the game plan as to how it is going to unfold. How exactly, I think they will probably use broadcasting media and the internet media, and probably I think use the content for driving the business. That part I think is not very clear to me at this point of time. But as I would think, I think any property, I think, which has got significant amount of presence in the markets, in created groups, I think, as far as I think the viewership is concerned, I think those media properties could possibly be finding the buyers, at least from the conglomerates, I think we find this kind of business is a strategic fit into their portfolios.
Devin, hi, good morning. What are your thoughts on Reliance? Because, you know, there's this AGM, of course, that's coming up. A lot of brokerages have scaled up their target prices on the stock as well. What can one expect? And in the run-up to the AGM, would you buy the stock or would you put more money in the stock?
Well, good morning, Samir. Reliance continues to be buy on dip story, and I think any fall in the price during any correction, I think, is a good opportunity to buy into the stock. Having said that, I think this year probably the company will be in the vicinity of around 1,30,000–1,40,000 crore worth of EBITDA, and it is continuing to grow at around 20–25%. At least I think in the new generation of business like Geo platform, and even 15% kind of growth is in retail as well. The conventional O2C business, I think this year has been, I think, extremely good for the company, along with the exploration business. So from that perspective, I think this year is going to be a bumper year as far as I think the outlook on the profit is concerned for the company. So this is one point I think which will probably get validated in various announcements I think which might come up in the PGM. On the other side, the 5G integration is basically becoming a key issue. And that is where probably I think some words of I think direction would probably be coming out, wherein how exactly the 5G will be playing out. My understanding is that I think it is likely to probably I think score maximum on the enterprise side of the solution. And that's where probably I think you are likely to see the larger amount of revenue from the business coming in from 5G related implementation. And last but not the least, I think the larger play is also on the side of new materials business. I think how much progress the company has made and what are the further strategies in place, I think that could possibly get announced in this AGM. So yes, I think given the annual report in which I think a lot of coverage has happened, I would think that I think these are some of the points on which the market is keeping an eye on. And let's wait and see I think what exactly it would be. But overall, I think the Reliance remains I think a structural buy. To answer your question, and any correction in the price, I think there is a buy opportunity as far as the stock is concerned. We continue to believe that this is, I think, around 25% kind of an appreciation provider on a yearly basis, at least for the next 5 years. That much visibility is currently seen in this particular.
Devin, hi, good morning. Any thoughts on these tier 2, tier 3 banks which are making a comeback? RBL was up 6% yesterday. You know, IDFC First Bank was up 6.5%, and a bunch more.
Hi, Prashant. Good morning. My understanding is the corporate side of the lending has started picking up. And that is where probably I think some of these banks have to talk about higher amount of business, which up till now I think they have not been I think having that situation. This year seems to be a turnaround year for the banks as far as I think corporate lending acceleration is concerned. And this is where I think probably some of these banks who have been languishing for a long time are now basically finding their recognition. Having said that part of it, I think some of the larger corporate banks, I think they also want to look at some of the mid-size and smaller banks to get integrated into, I think, their businesses because of the need to create the larger book size at the same time, and at the same time, the larger reach, I think, from the perspective of, I think, building a liability franchise. So this is where probably, I think, some amount of strategic buying and interest could come into some of these banks. Fortunately, in many cases, the banks are available at, I think, valuation, which is comparatively much lower. And that's where I think the strategic buyer may find interest into some of these companies. I have not studied RBL enough, so I think we'll refrain from answering RBL-related point. But in general, I believe that the corporate sector banks, the private sector, I guess, I think are right in position. The likes of NDTV talking about doubling the size of the AUM in next 4 to 5 years' time. Or even for that matter, even ICICI quota kind of price, I think growing at around 20% kind of a growth on the AUM building. So I think they are being relatively more interesting from the investment point of view.
Okay, all right. Just stay on, Deven. We'll come to you in just a few minutes from now. Now, global markets are in focus. Oil has risen once again as Saudi Arabia plans for an output cut. So Brent is at $100 a barrel. Also, there's a 3-day Jackson Hole Symposium, which starts tomorrow. And there's an expectation that post that, Jerome Powell in his speech could reiterate the fight on inflation. All of this means that there could be some impact on metals, on gold, oil, etc. Hugh Keener, the Managing Director and Chief Investment Officer at Swiss Asia Capital, joins us now to talk about that. Hugh, good morning and thanks for joining in. First on crude, once again, at $100 a barrel on Brent. What are your thoughts and what is the expectation as we move along?
You see, I think most commodities, including energy, have actually done a significant correction since May. And we always thought about $70 to $80 would be the bottom on energy. I think 80 was just about the bottom and it started to reverse on the back of the Saudi announcements. I think people are getting too much hooked up on all the stories of interest rate increases and strong dollars. And so the futures market is driving very big yo-yos whilst actually regional issues on getting access to that material at the same price is almost impossible.
So, right. So what does that mean? I mean, so in a way you're kind of agreeing with what we heard from the Saudi Arabia Energy Minister, that there's a big disconnect and prices need to adjust much higher?
I think I more or less agree with what he's saying. I have to specify that because, as you know, oil prices are swinging depending where you are in the world, depending what your infrastructure and logistics right now is. So we've got very big dislocations. So probably people who get oil at significant discount to the $80 we are today,
And there are probably some people who pay significantly more due to logistic issues. So the spread is actually quite big, and therefore the futures market is not really representing actually what's happened on the ground on the end for the end consumers.
Where should oil prices be to accurately reflect demand? One, and two, the other view is that maybe demand is slowing much faster than any, the supply issues are affecting prices. So that's the other view. Yeah, go on.
So if you actually look at the price, we're actually at the price level prior to the Russian war. And so basically you can actually say all the hype we actually been built up in the price has actually disappeared. In the meantime, what we have is a slowdown of the economy, particularly in the United States. Whereas if you look at the Chinese economy, it's been pretty weak, but there we have already seen stimulus. So the question is, how much more can U.S. actually tighten in that environment where the dollar is already getting reasonably strong towards 110? And I think at the price level, probably people will start thinking a slowdown on tightening might be in the card, particularly as the recessionary environments are actually appearing almost everywhere around the world.
Good morning. So actually, that's an interesting point you made because a lot of countries getting oil at a discount, like India gets from Russia, and a lot of countries having to pay the premium. So is this price on the screen relevant at all? I mean, what should one look at then?
To be honest, I think you can probably as well look at the future price for tomatoes, and then you go and buy your tins of tomatoes and the price will be all over the place. So go to a wet market and you can buy probably tomatoes at very different prices depending who sell it to you. And I think we've been used in the past that this gap was actually really narrow. And in today's environment, actually, these gaps are huge. They are almost like from bottom to top, they're probably double. So what we have to see is that these things is tightening up in order for a future market to even be representative.
But coming back to what's happening in Europe, it is a big crisis, right? The energy crisis in Europe. I mean, we've seen the euro hit a 20-year low. There are high temperatures. There's a drought situation which has hit the power supply in a big way. How does this change the dynamics from an investment standpoint? Will there be more money moving towards emerging markets, towards Asian markets because of the crisis that we're seeing in Europe?
I think you might get capital flow leaving Europe and Japan because basically we still have zero interest rates in a rising inflation environment. So that's a risk. You have an energy crisis and the food crisis around the world, despite that if you look at grain prices have almost retrieved to pre-crisis level. So I think what we have now is that the financial markets are discounting now recession in the commodity space, whilst actually low inventories and problematics we have on the ground might actually prove that by next year or by later the year, we are actually moving back into a shortage crisis. And we see that by backwardation, we see it on the curve, we see in delivery issues. So commodity prices will probably go up again for end users. I have no clue where the future market will be, because the future market is basically a financial instrument by bankers, has nothing to do with the real economy.
Jörg, what's your view on what's happening in China in terms of what a lot of people are calling some kind of an economic crisis, and what kind of an impact would it have on asset classes?
So look, if you look at China, we have basically a real estate problem and probably going to get some defaults in that segment. But then on the other side, we've got one of the largest booms when it comes to technology. And if you look at new technology, electric vehicle, electrification, I think the capital investment cycle in there has gone up over 30% year on year. So what you have is actually a part of the economy which is in dire straits, and the other part of the economy is growing really fast. And the government is stimulating the economy of the future and tries to support the wind down of the old part of the economy which is in dire straits. So I think as such, if I listen normally to North American commentary, it's all bad. Nobody talks actually about what moves up. And if you look at the GNP, is actually not contracting, it's actually reasonably firm. And so from that point of view, that's what you would expect in a stagflation environment, is a transitional shift from A to B. And you see that probably almost everywhere else emerging. I think in the United States, you see the same. You have probably as well a property market crisis in some areas. And in other areas, you actually have shortages on property, and you see the government coming out with critical mineral policies in order to build up the next level of electrification. It's where you want to be. It's actually where the areas which are growing, you want to be investor, and not necessarily the areas which are suffering headwinds.
Yug, I mean, if you're up for it, just a quick rapid fire. What is the right level for oil prices in your assessment?
I think you'll probably have a very good bottom building. I think your risks are on the way up. And if these future markets are starting to cover up the shorts, your risk is that the commodity market is going to be a new bull market. And if you look at the new bull market, your oil price are probably finding levels somewhere between $150 and $200. So your risk reward structure is probably in favor of higher prices.
$50 to $200.
$150 to $200.
That's the right range, somewhere there. And
no, that's the higher end range, and the bottom end range, I'm looking somewhere around 70 to 80 as a support.
No, you said the reason I'm asking is you said right now the paper market is not accurately reflecting what's happening in end user demand. So prices need to adjust higher. So what is that higher is what I'm trying to understand.
When people are excessively shorts, when traders are really excessively shorts, and you can look at the whole base metal universe, backwardation is enormous. You can look at the precious metal universe. We have backwardation only for 3 months, where people having to wait 3 to 5 months for significant deliveries. You know that the price will have to move up in order to square that level. The question is how many shorts will have to cover, and how high has the price got to go? I don't know. Certainly higher, and you know when shorts have cover, you get speculation coming back in who play the other side and pushing the prices higher. So we're going to get probably from an oversold level to an overbought level, and that means normally you have a fair good chance of prices to move for 30 to 50%. It's not a big deal.
Okay, well, we leave it at that. Thanks a lot for joining in and giving us your view across asset classes. Have a great day. Let's slip into a quick break. On the other side of the break, we have 15 minutes to go for the pre-opening rates to kick in. Nitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. Stay tuned.
Different ages, different stages. Get best protection with Star Women Care Insurance Policy. Always at your doorstep.
OLX Autos ही देता है आपकी कार का बेस्ट प्राइस। क्या बात कर रहे हो?
यही कि OLX Autos ही देता है आपकी कार का बेस्ट प्राइस। ये प्राइस नहीं, सरप्राइज है। विजिट olxautos.in।
तुझे तगड़ा इंसेंटिव मिला है। क्या प्लान है?
सोच रहा हूँ गवर्नमेंट सिक्योरिटीज में इन्वेस्ट करूँ।
बिल्कुल सही सोच रहे हैं आप। अब गवर्नमेंट सिक्योरिटीज में इन्वेस्ट करना आसान हो गया है।
पर कैसे?
RBI रिटेल डायरेक्ट स्कीम में बिना ब्रोकर के आप इन्वेस्ट कर सकते हैं और आपको आपकी पूंजी पर मिलेगी रिटर्न्स। RBI पोर्टल पर जाइए, मुफ्त में अकाउंट खोलिए और अपने बैंक खाते से सीधे पैसे इन्वेस्ट कीजिए। सुरक्षित, आसान।
रिटायरमेंट के बाद मैं भी यही इन्वेस्ट करूंगा।
बहुत सही कह रहे हैं आप। RBI कहता है
जानकार बनिए, सतर्क रहिए।
Some folks dream of easy access to airport services. Some have ease of a card. Be it lounge access, meet and assist, spa services, and more. And what powers their credit and debit card is. Dream Folks, India's largest airport services aggregator platform. Dream Folks.
सर, आपका कार इंश्योरेंस रिन्यू तो सेम कंपनी से करा लो ना।
चिंटू, तेरी पैसे उड़ाने की आदत गई नहीं अब तक।
मम्मा,
policybazaar.com पे 20 से ज्यादा कंपनीज के कार इंश्योरेंस कंपेयर करके खरीदो और पैसे बचाओ। सिंपल।
Welcome back. Well, the market had a very interesting day yesterday. The point I want to reiterate is we had a gap down yesterday, but because we were sitting on 2 days of losses, after that gap down, that straight away opened at 20-day moving average, there was a bit of an algo trade which played out, and the market actually ended at high point of the day. But that was yesterday. What happens today? Because, you know, even after a gap down, there will be some distance away from that yesterday's low and the 20-day moving average. Sudarshan Sukhani and Mitesh Thakkar are now joining us for a quick chat on the market. Good morning, Sudarshan. Given the way trade played out yesterday, do you buy this dip or do you wait for sort of a better entry opportunity? Or is there a different trade, maybe sell? What would be your trade?
Good morning, Anuj. No, my trade is only to buy. Yesterday also I said we will wait for a consolidation. And today the same view continues. See that 17,300, 17,400 zone was supposed to be support. At least for the time being, it's acting as support. So the trade will be to go and buy this market when appropriate technical signals come. But I don't think that's going to happen today. The chances are we'll see a very choppy market up and down and a narrow range, because yesterday we had a fairly wide range. So today is again a day when I would not trade. If at all by the afternoon there is an opportunity, I would like to go long. That applies to the Nifty and the Bank Nifty both. In the morning, I would just sit aside.
Morning, sit aside, wait for consolidation, see if that's ending, and then buy both Nifty and Bank Nifty. That's the only trade that Sudarshan has. Pretty comprehensive there. Mitesh, good morning. The trade worked out yesterday on the long side, but are you carrying home any longs? What's the call on those? And for fresh trades, what would be the trade on Nifty and Bank Nifty?
Good morning, Anuj. I think while today the SGX is slightly negative, what is important is that yesterday's movement kind of marks at least an important pivot. I think 17,400 is reconfirmed as an important support area now, and we might have an intraday violation of 20-30 points. But broadly, if this movement is, what I'm thinking, which is a kind of consolidation and a pullback and a broader up move, then I think 17,400 becomes a very important reference point. With that kind of view, I think declines would still be more of buying opportunities, since we are not very far away from the lower end of the range. I think broadly this choppiness, this consolidation, this contraction could continue for next 8 to 10 sessions, and then we might see a resumption of an uptrend. So for that timing, you will have to be slightly stock specific in your approach. But I think yes, if we get a bigger dip, sorry, to levels of 17,400 or thereabouts, I think then the index can be bought as well.
Okay, let's talk about individual stocks then, shall we? Because we have plenty of stocks. Although the SGX Nifty is hinting at a muted opening, the stock-specific action has been good so far. So Darshan, what's on your list? We saw a lot of buying action, buying at lower levels yesterday. What would you look at today?
Well, I'm still looking at stocks that are outperforming and underperforming. So AU Bank is a stock that's been outperforming the Nifty. It's consolidating. It did not participate in any decline. Yesterday it had a very good day. Consider buying it with a stop under 835. IEX is a stock that's been falling. Indian Energy Exchange consistently. It's in a bear market. It's an intraday short with a stop above 160. Marico has been in a trading range. That trading range is looks like a very choppy action. That may have some decline. That's an intraday short with a stop above 518. So I really have 2 longs and 2 shorts, and my final stock is a long trade. That's Coal India. It's an excellent chart, a small consolidation which was actually sideways. It's a buy with a stop under 213.
Okay, and Mitesh, what are you buying and selling?
Yeah, I also have a mixture of buys and sells. On the buying side is Balrampur Chini with a stop at 344, targets of 369 here, and Delta Corp. That's a buy with a stop at 205 for targets of 219. While HUL is a sell call with a stop at 2620 for targets of around 2540. And finally, a buy on Lupin with a stop at 686 for targets of 718.
Okay, thanks a lot for that, gentlemen. Those are some ideas, but the big story in the media space and in the stock markets as well is Adani Group indirectly acquiring a 29% stake in news media brand NDTV. They've also launched an open offer for an additional 26% at 294 rupees per share, totaling 493 crore rupees. The open offer price is at a 20% discount to NDTV's current market price, and a lot of people are calling this a hostile takeover. Karan Tarani, the Senior Vice President Research Analyst at Elara Securities, is joining us now, who's tracked the space very closely. Karan, a lot of people perhaps saw this coming because we've seen the way the stock price has zoomed, right? So let's get that out of the way first. On the stock itself, what's your view after the big rally that we've seen in NDTV?
I think if you look at the valuations at which this company has bought, it is at a very hefty premium, and the prices also maybe would have moved, because of that kind of speculation which was building around the stock. So currently, just to give you some math here, the valuations are at almost 20 times PE from a 1 year forward basis. If you look at for something like an NDTV, and this is at a huge premium versus peers. So if you look at something like a TV today, they are trading at almost 6.5, 7 times PE. If you look at the larger peers, which are into the GEC space, which is a much larger market, they are trading at anywhere close to 12 to 14 times on a 1 year forward PE basis. Similar numbers are there on an EV sales basis as well. So the valuation has come at a very huge premium. And this is, despite this 20% discount assumption, which is there, over the current market price. So I don't see valuation sustaining from medium to long-term perspective because news as a genre, as a market is very small. It is only about 10% of the overall ad spend pie for the TV industry. It is definitely growing at a faster clip, whenever there are elections, state elections, general elections, at about 10 to 12% kind of a number whenever there are elections. And excluding that, there is a steady 10% CAGR, which is possible. But because the valuations are so premium, I don't see them sustaining over the medium to long term.
Karan, good morning. Does it ever, make you wonder what makes people go after these assets? And it, as you said, pretty expensive. Perhaps do not make as much money. But is it, what is it about, say, an NDTV that that would have got, Adani so interested in an asset like this?
So, maybe I think, firstly, this market is also highly fragmented. So it is not only NDTV, which is there. There are many other news channels up for the offering here. And the news genre specifically has now become a market which is like a winner takes it all market because currently, we are moving towards selective viewing. We are moving because of NTO 2.0, a lot of regulations which have come in over here. And distribution has also become a challenge for news channels because they've always been piggybacking on the FTA part. Now, to the logical reason in terms of why such expensive valuation, I mean, that could be the best answer, given by the Adanis themselves. But clearly, news is one segment which has got very low threat of digital. So if you look at news genre specifically, I mean, the consumers want to watch it live as compared to a GEC or any other genre wherein they can do more of catch-up TV content. And a lot of the eyeball shift is happening from TV to digital for other genres. Which is not happening from news genres. So that's one big advantage which news has got versus other genres. I think the second big advantage is that, the news market as such in terms of digital side is much better as compared to other broadcasting plays in TV. So if you look at other broadcasting companies like Z, Sun, even Food, Viacom Food for that matter, they all have to invest a lot of money into their own app. And that is like a huge cost, in terms of the high content cost which they incur, the tech cost, the distribution cost. So news that way is a business model on digital, which is kind of platform agnostic. And, you can actually showcase your news content across multiple platforms and make really good amount of money and growth. So just to give an example here, TV today, which is there, they drive close to 18 to 20% of their revenue from digital segment. And their revenue on digital segment has grown by 35% CAGR in the last 3 to 4 years. So these are two reasons in terms of why news genre is so compelling and better as compared to other genres on the TV segment.
Karan, hi, good morning. Is this a bit of a peculiar situation? So should we, this particular transaction, and then if that is so, is it right to attribute the same multiple 3.5 time forward sales? I think you put out in your note. I mean, those kind of multiples to where other television assets should trade at. I mean, should one do that? Or you think, this is one of its kind or whatever? I mean, a peculiar situation.
I think this is one of its kind. So I don't see, the other broadcasting companies, moving up 2.5, 3x in terms of share price. In fact, it's the other way around. NDTV could see a sharp correction over a period of time because, as I told you, broadcasting as an industry is not growing more than 7 to 8% in terms of CAGR. There are multiple regulations on ARPU as well because of NTO 2.0. There is a huge overhang on the industry as a whole because of the eyeball shift to digital. And the digital OTT market is very fragmented. There is too much to do there in terms of content investments. So I think it's the other way around. I think, NDTV valuations will probably move to a more realistic and will probably move downwards over a medium to long-term basis.
Okay. Karan, since we have you on, just a quick word on PVR as well, which is something you track closely. Has it fallen enough?
I think there is a certain amount of 5 to 10% downside on PVR which could come in. But as pointed out in our earlier discussions as well, the merger is a very big trigger. So I think you will always find respite, for PVR as a stock, because the synergies from merger are going to be very big. And in terms of consolidation, it's like a very huge opportunity for both these companies.
Okay, Karan, thanks for joining in and giving us your views. That's the big story in the media space. Let's slip into a quick break. On the other side of the break, we'll come back with the pre-opening rates. Also, the IT space has been in focus on the back of downgrades that have taken place, companies holding back on variable pays. Ankur Rudra of JP Morgan will be joining in to discuss that.